Hi guys, we will talk now about time frames and which time frames you should use when you start doing your analysis, when you start looking for entries. So in this video, we will learn how to choose the time frames for your trading style. Everybody have different eyes. Everybody have different ways how to look at the market. So you have to find your own, style to look at the market. I will give you an overall what most of the traders and what works for me, but everybody's a little different. So we're going to go and understand the relationship between the higher time frames and lower time frames, and we got to understand how to you know do the daily analysis to understand your overall this direction, and your daily analysis, you use high time frames for those ones. And when when there's a little bit of consolidation, or you're in a trade already and you don't understand why your trade's not moving no more, so sometimes we go to lower time frames to understand what's going on. And you gotta understand too how to go for high time frame to lower time frame to get like precise entries. Understand when the market is about to start moving, and you use the lower time frame for the precise entries, of course. And you don't understand how to have a workflow, and to understand how to come from higher time frames all the way to lower time frame for your entries. So that's why pretty much I explained to you guys on this video, and I explained to you every single um, time frame, what I use it for and what I think is the best to use it for. So let's hop into the 1 week and 1 day. This is one of the highest time frames that we can look at the market. Obviously, you don't want to use these type of candles to help in the trade, because they barely move, so you don't understand what's going on, and you barely can see where you place your trade. So this use pretty much for the overall market bias. You look for pretty much, I use it for the daily bias too as well, and for to understand the macro levels, institution levels, and these minor key levels from previously weeks, or even previously months, right? And when we go to the 4 hours and 1 hour time frames, I use these. This is what I use for my daily bias, and the previous session bias as well. I want to know what that previous, example, like if I'm gonna trade on Tokyo, and I want to know what New York did the day before, and I go to my 4 hours and 1 hour and understand what New York did for those 8 hours, etc. So like I say, this is for the previous recent sessions, and then it helps to understand if the next sessions, we trade Tokyo and we're going to London, understand if London is going to have a continuation, or is going to create a reversal. It's going to come back to 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 whatever. So, and we go to the next type of time frames, which is 30 to 15. And I want to explain something. I put two different time frames inside of each slide. So I don't want you guys to be looking, oh, say 30 to 15 minutes. Let me find that. Obviously you guys can see here. You guys can find that. You guys can choose only one. Is either 15 or either 30, but not you can choose both at the same time, or you can have only two tabs open. I'll explain that later, or in the phase number 2 of the academy. That's pretty much me already in trade, so I'm trying to leave those videos later on, to not make you guys go through emotions while trying to explain the 30 of time frames. If that makes sense for you guys. So for this type of time frame, this is my favorite type of time frames to get into the trade. Um, this is what I use. Sometimes I don't even, when I'm into the week that I already know what's happening, I already know the market bias and everything, and I already did my daily bias during the earlier day. I don't change my chart. The chart always stays at 30 minutes or even 1 hour. It stays at the same time frame, because I'm not trying to to get triggered by 1 minute, 5 minutes time frame that I explained that in the next. But coming back to this one, this is what I use to do my entries. I put it in 15 minutes, 30 minutes. It helps because you don't see as many fake outs. If there's a lot of movement for somebody that enter an institution player place of trades, 15, 30 minutes, it kind of show a little bit of bullish, a little bit of bearish, but it does not show craziness. Like you don't see the chart moving like that. It stays like kind of calm down, and especially in gold. This is all these analyses on gold for me. So um this time frame give you a clear view of high, lows, and structure without too many fake outs. Like on the smaller charts, like I said, like in the 5 minutes, 1 minute charts, it give you a lot of like movement, a lot of fake outs. 30 and 15 minutes time frame is perfect balance for precision and clarity. This is perfect to understand if we got a swap liquidity here, for example, with a 15 minutes, we can see this bearish candle in here. So we can see this as an engulfing, so we can understand this is probably gonna have a clear reversal in here, as you guys can see. This is only an example, but this is I love this time frame. This is the time frame that I use for my entries. And 5 minutes to 1 minute. This is how I start trading gold. I'll be honest with you guys. I started trading gold with this type of time frames like 2 3 years ago. I was scalping to go until I find that how much money more you can, how much more money you can make. Doing a little bit of intra trade trading instead of scalping. Trying to leave the trade run a little bit and trading in 5 minutes, 1 minute. It's good if you are trying to be really precise with your entry. You only want to, you know, only willing to lose just small amount of money. So you want to be really precise with your entry. So yes, I go to 5 minutes to 1 minute, but I don't do it often because it triggers me too much volume, the market too much red. For example, in 15 minutes, you don't see this red. In 15 minutes, you only see like green, green. Example. When you have 5 minutes, you see red, 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 and you know that sometimes that triggers your mind to think like, oh, let me get out of the trade because the market start making some red, and I think it's gonna have a retracement. So I usually use 30 to 15 minutes for that. If I start seeing some red on the 15, 30 minutes, yes, that should be a indication to me that the market it's slowing down or it's about to have a retracement. So guys, this is pretty much it for time which time frames you should use, and like which time frames not to use as well. And we go more into deep into these in phase two when we actually into trades. You can see myself jumping into different type of time frames, why I am the trade. If the trade starts sending and starts slowing down, you can see me jumping into 5 minutes, 1 minute, and to understanding what's happening in that consolidation right there. So that's it for these guys, and let's move to the next video.